Hi everyone, David here from Mortgage Choice. Great news for mortgage holders. The cash rate is officially on hold. So this will provide some much needed relief for them and for their mortgage repayments, which is definitely hitting their hip pocket here. So fantastic news. What happens next, we'll have to wait and see. It is predicted that they will stay on hold and actually start to dip over the current months. So we are watching that with a very close eye, and obviously watching the banks to make sure that they then pass on the same cuts for clients. Now, there are still quite a large number of clients on fixed rates, and there will be for the next 3 to 5 months. So not everyone is impacted by this announcement, but a lot of people are, and so very, very glad to see. I did want to point out that if you are struggling, just because they're on hold doesn't make them any easier where they stand now. There are a few things you can do to help ease the cash flow, and I'm going to run through those at the end of the video. First thing I wanted to mention is that the RBA, as I mention each time, is aware that their decisions don't impact the market or the economy immediately. It takes time. Now, this is why they're putting them on hold. Inflation has cash rate on hold. Inflation has started to curb, and so now it's just a matter of if that does continue to reduce or if they need to review their rate increases. That's something we'll have to wait and see, but it is expected that inflation will continue to drop, which means rates can stay on hold or start to drop as well. We'll have to wait and see. Also want to touch just briefly on the Porter Davis situation. Obviously massive news in the media over the last week. Now, if you're impacted by this, not just having a contract with them, but working for them or your company having a large contract with them, this is going to impact your lifestyle and your cash flow too. So please pay attention to the things that I mentioned at the end of this video. And before I do get into that point, the last thing I wanted to mention is the change with the expectation of where rates are moving over the last month, the last 6 weeks. At the start of March, interest rates were expected to climb towards August and then start to plateau towards November and then start to dip, but dip very slowly. The bank over in America, Silicon Valley Bank, closed obviously, and then there were some subsequent closes overseas too. That has kind of been the trigger for this shift in mentality. The economy is obviously a little bit fragile. Overseas, which does impact our market as well, is a bit fragile. So we need to just wait and see what happens. So things change very, very quickly and quite drastically, which is why there's a little bit of a caution on these plateaued rates. Let's wait and see what happens over the next few months. Let's not, count our chickens, so to speak. Now, in terms of improving cash flow, if you are struggling with the mortgage repayments, the first thing to keep in mind is that the letter that the bank sends you after each change, when the bank does change the rate, it's going to be a month or so old, and then it will be implemented to your home loan after a month or so from there, which means it's not accurate and it's very hard to budget according to that letter. So pay attention to your banking app or your website. And if you still can't find the details, definitely give the bank a call and they can help you with confirming what your next repayment will actually be. Second point is your repayment frequency. Now, a lot of clients make weekly or fortnightly repayments, which is fantastic, making that mortgage or repaying that mortgage much faster than scheduled. Excellent. A lot of banks will calculate weekly and fortnightly repayments by a month divided by 2 or divided by 4. Now, again, great in terms of reducing the mortgage balance, but for cash flow, it means that you're actually making more repayments throughout the year than you would if you were paying monthly. So if you are struggling, you can change that back to monthly and your cash flow will actually improve. It looks like you're paying the same thing, but you're not. You're actually paying much less monthly. So that is something that we can consider. Last thing that I wanted to mention is reviewing your mortgage. Now, obviously, payments and the interest rate that you're on are the two big things, but cashback. We talk about cashback a fair bit, but not everyone knows that it is literal cash that the banks will give you. If you move to a new lender, they will pay you to move there. They will transfer $2,000 to $4,000 cash, depending on their offer, to your bank account to use as you see fit. No strings attached. So if you're struggling, maybe there's a better rate out there for you, and maybe we can get some cash for you along the way. It is something to consider. With rate reviews, we obviously keep an eye on our client rates and speak to lenders to try and find a discount. We're actually really proud of our progress over the last 3 months in particular. We've saved clients over $220,000 per year in interest with the lenders. Massive accomplishment. So we're very, very proud of that. And we do highly recommend that if you haven't reviewed your rate in the last 2 years, especially over the last 12 months, please reach out to us and we can see what we can do to help with that repayment, with cash flow, or at least just save some of that interest for you. So lots of news this month. As always, please reach out to me if you have any questions, and especially if you haven't reviewed your mortgage in that period of time, it is time to take a look.